Hey guys, this is Bruce Marshall from Simpler Trading with the free nightly video update for Wednesday, May the 9th. And I've got, of course, we'll start here with the S&P. It was a great day today. We finally broke out of our range that had been giving us a little overhead resistance for a while. I want to talk about that and kind of see where we go. We will look, I'll show you here. This is the ticks, of course. We had, really, it was kind of a, kind of an average day. Nothing really out of the ordinary, no extreme readings as compared to yesterday, where we're having on both ends. This was kind of middle of the road as far as the tick reading goes. But let's look at the market here. So we came out of the gate this morning, and this was a pretty decent little open. I was watching the futures and things were, looked like we were going to have a nice day today. And we had been bumping up against this 2680 resistance, 2682-ish resistance for quite a while and could not get through it. And this morning we opened strong and then kind of faded. And I thought, you know what, this is going to fade. And I thought we'd get another, and this is up until, almost lunchtime. And I thought, oh man, it's going to be another one of those watching paint dry kind of days. And then we broke out. But let's back up here and show you a little bit what I'm talking about as far as this range goes, give you a better perspective. So this is that 2680 area that I had been talking about. And as you can see, this goes back, this is Monday. Of course, we had, tried to touch it and break through it a couple times, had just not been able to get through it. Then broke through, and guess what? We slammed right in 2700. It poked its head above 2700 just momentarily here, and I was really hoping we would close above 2700, but we made a strong little turn there into the close. But let me back this out even a little bit further and show you some other levels here that I've been watching. Again, here's the 2682 level. It's a little easier to see him on this when I go out a little bit further. So again, 2682 level is actually right there. And again, we had bumped up against this quite a few times and finally broke through that. In watching, the reason that that's important is that we had tried to break through, rolled over, tried to break through, rolled over, and rolled over there, tried to break through, and I thought, if we roll over again, and especially if we come back to these lower levels down here, this is one, it's going to take all the wind out of the sails of any kind of rally in the short term. And two, if we break through this number, this is 2600, 2550, 2535 down here, much lower levels, and if that didn't hold, things could get really ugly. Now, we are obviously not out of the woods yet, but things look much, much, much better than they did, and looks like we're kind of off to the races. So, where do we go from here? Let me pull over a couple of charts here. And this is the S&P on a daily chart, and this is one of Carolyn's charts. Thank you, Carolyn. And let me show you what I'm looking at here. So here, this is the range, again, that we had that we've been chopping down into in the last couple of months. You guys know how much fun this has been. But you notice our wedge pattern that we have come into, and I've been saying for quite a while, this is building up compression here to most likely kind of break out one way or the other, and it hopefully is to the upside, right? So notice these levels, 1272 here, and our ultimate target up here at 2750. Well, what we needed to do, and so far we have been able to do, is to break through, and so we're here. There was another level down here, again, this 2682, and so forth. But the point is, if we can break through this, and hopefully we do it, the sooner the better, the next shot's this way. Now, I looked at the expected move today, and the expected move to Friday is about right at 27.20 roughly, which is another pretty meaningful level, and that's just based on the expected move going into Friday. And you know, from there, again, if every hurdle that we clear, it gets easier to, you know, to go this way. And the reason it does is that we build, you know, the momentum builds on the momentum, and it can turn into euphoria. You guys know how the FOMO works, right? Here's the same thing on the ES, and as we can see, let me pull this up. As we can see here on this one, kind of same thing. 27.14, 27.26. If we can get there, hopefully we get there to Friday, because if you were in the SO room with me, I set up a butterfly at 27.20 on SPX, which would just be awesome if that works. Here's the thing too. This, you know, and Carolyn says it better than anybody. If this low is good, you know, that's our target right there. And then, of course, everything resets off new levels, and then the next level is up here, the next level's up here, and that's when our FOMO kicks in and we start getting into, hopefully, another one of these kind of moves. But, you know, we'll see. We have to take it day by day. Obviously, we're watching these levels on the downside for any break of the trend. You know, what could cause a break? Obviously, we've got a lot of political, geopolitical unrest with the Iran deal and so forth. So we've obviously got to be aware of that and you know, careful and so forth. But you know, that does not mean that we can't rally, because we've all heard, you know, forever, you know, the market climbs the wall of worry, right? So, you know, absolutely we can keep going. And you guys remember when over the last, you know, 4 or 5 years, when we've had all of these bad things going on, and you think, how can we be rallying? And we just rally day after day after day, and every day it seems there's more bad news. You know, that can happen, and there's not that much bad news. You guys, you know, we saw the employment numbers, and unemployment's the lowest in 2 decades and so forth. The economy's really hot, which, you know, inflation is the problem there potentially, but right now we're okay. The Fed's, you know, holding everything steady. So, you know, I saw consumer spending was up, you know, so forth. So things should, you know, continue to work in our favor. And again, if we look here, and then again, this is kind of crude drawing, but there's that low, you know, what I expect, and in 2 ways to look at it. You know, if we can break through here, you know, we go higher. If this doesn't, if we fail at some of these levels, you know, then we start looking at some of the lower levels and see kind of where we could end up. And worst case, I'm kind of giving the best case, that we, you know, rally, and I'm talking my book. We all want it to rally. I think everybody's tired of this stuff that's been going on. But you have to look at the other side. If we should fail, or if there is an event of some type that makes this go down, Fed or China or Russia or whatever, you know, always be aware of these levels down here and what might happen if we go this way. I am aware of that. I've got one tiny butterfly down here at 25.50, one contract. That's my conviction level to the downside. I do have a straddle on here at 2,700. I just put it on today. So, you know, keep that in mind. That is something else to consider, especially with falls having come off as much as they have. So anyway, other than that, we've got Home Depot next week. We've got Lowe's the week after that. I suspect both of those are going to be good with the consumers, you know, out there spending and so forth. Housing numbers are, you know, are great and all that kind of stuff. So we are coming out of earnings season, so things should kind of get back to, you know, quote unquote normal if we can break to the upside here and get into more of a trading range. And it appears that the market at least wants to do that at this point. So that's what I got for you today. Nothing specific. We really don't know. We're not out of the woods yet, but over the next, I would say, you know, the next probably 4 or 5 trading sessions, we'll know if we're going to break, you know, to the upside or fail. and that will tell us a lot. We'll go to the next step at that point. But you know, I do continue to trade lighter than normal. Again, like I said, we're not out of the woods yet, but things are looking much better. So I hope this helps, and I will see you guys at the next update. Thanks a lot, guys. I appreciate it.